dedicated and hardworking that want to improve right here, you know, on the call tonight. And I'm super excited about tonight. We've got Josh and Josh's team at Neo Home Loans going to help us out and join us every other week to do some specific training that's going to help us all, you know, sell more real estate, close more, get more properties under contract, and learn how to be better realtors by understanding, you know, really the market and the lending process better. So yeah, thanks, you know, Ben, Mike, and Josh, all three of you guys being on tonight. I think I saw Ben's name on here as well. Hey,
Yeah.
Ben, how's it going? Good to see you. So
how you doing, Eric?
I'm doing great. Good to see you. So we've got, I know you guys have kind of a little bit of a, you know, a plan or an agenda tonight. So we talked about a couple different topics that are both really important right now. Did you want to kick it off and kind of, you know, run with the first topic and see if we get to the second one?
Yeah, I think I've been tasked with this since I'm the one not on dad duty tonight. So I can definitely run with this. Can I share screen here?
Oh,
Good.
let me make sure it's unlocked here. There you go. It's open now.
All right. So we will, I don't even know which screen. I guess we'll go with this one. All right. So want to start off really, I think we've talked before about bidding wars and what we do, how to win in a market like this. And so I want to start with this slide, this flyer right here. This is something that we send out on every single one of our pre-approval letters. It's going to give them basically 5 steps that, you know, are crucial in our opinion to winning in a bidding war. Obviously, first one, get pre-approved. Second one, offer to pay more. Third one, learn the seller's motivation. Fourth one, offer a faster closing. Then fifth, include a personal letter. Kind of where I want to focus on is this offer to pay more. You know, I think a lot of the other stuff, a lot of lenders, a lot of people can tout the, you know, learn the seller's motivation. That's on you guys, you know, getting in there, finding out what the hot buttons are. Offer a faster closing. I mean, we are going to be amazing with our speed. But this is really nothing that involves the buyers and what we need to do to kind of help educate them and help them feel comfortable with offering to pay more. I think in any transaction, it has to feel like a win-win. So as a real estate agent, as a lender, you know, as a lender, we're kind of selling rate and fees, and we need to make them feel like they won, they got a deal, they, you know, came out on top. As a realtor, you're negotiating a contract. Buyers want to feel like they won, they got something. Sellers want to feel like they won, they got something. But right now, the sellers are holding all of the cards. They hold everything. And so, you know, it's hard to make our buyers feel like, hey, you won. You know, you did win something, even though you're paying more for, you know, what you feel you should pay. You're paying more than what they were asking you to pay. You know, and so that's kind of where we wanted to focus a little bit on this, is how do we make them feel comfortable and feel like they won when they are paying more, you know, for a property. So, you know, some of the slides that I'm going to show, a few different slides that we prepared, pulled down from, you know, various websites. And the first one is this one where it's bid over asking price. So the first thing we need to get them comfortable with is you're going to have to bid over asking price. It's very counterintuitive. You know, it's a little, I could coin one of Josh's new words he came up with, which was uncomfortability. I think he used that in a presentation recently. Most people use discomfort, but Josh made up his own word of uncomfortability. So we've got to get them comfortable with bidding over asking price. So looking at this slide, you've got, you know, current asking 500,000. They're going to have to bid at least 15,000 over asking price. So total bid's going to be, you know, 515,000. But if we look at historical appreciation, the reason people are having to bid over, the reason homes are priced the way they are, realistically, they're going to make that money back in 5 months. They're taking a short-term a hit right now, but they're not looking to flip this house. We're not helping buyers get into flip situations right now. We're helping buyers gain knowledge, understanding to make a long-term investment. And that's where we've got to get their focus, is off of the short-term sting, the short-term bidding a little over price, is to how is this going to play long-term. So the first thing is kind of talking like, look, historic appreciation. If you look at this house, this is kind of hard to read. Let me see if I can make this. There we go. So, this home last sale in 2015, 400,000. January of 2018, 550,000. Today, let's say it's 500,000. They have to bid above ask. If we keep looking forward, it's going to increase. They're going to make that money back. But in the meantime, they are in this house. They are able to capture, historically low interest rates. And so that's where we need to kind of help them understand, if you're bidding over asking, it's a short-term, I don't want to use the word setback, but it's a short-term investment into your long-term potential, your long-term gain and equity that they will have. So I think I want to kind of skip, and we'll go over this one too. I'm going to be a little bit sporadic on some of this stuff, but I'm going to actually come. These two are linked together, and then we'll get into the last thing, which is the presentation that we can help you guys create. What was that?
Hey, Mike, I was just going to say, I'd love to pause for a second and give Jeff or somebody a second to comment on that idea of showing them the fact that, hey, if you end up getting in a bidding war, which, based on that last fact from the National Association of Realtors, go to that last slide, Mike, the bid over asking price. The first one you showed, I'm sorry, the multiple offer situation. From the pre-approval letter, sorry, Mike. Yeah, so there's just that statistic on the top, right? I mean, this is the thing that we want to let buyers know right away, is that 55% of home sales are resulting in a bidding war, and there's a fairly decent chance they're going to have to bid over asking price. What are you guys doing to help clients get comfortable with that? And is a visual like the one that Mike showed, that even if you're 15,000 over asking price, based on the appreciation, you're going to catch up to that in 5 months? Is that something that you find helpful? What else are you doing to get clients comfortable with that?
Hey, Josh, I'll chime in on this. I like the visual a lot. I haven't created a visual, but maybe based on what I'm going to say, you could add something to that visual, and that is go back historically as well to show them where prices used to be and say, what if you were in this situation in the past? I have the luxury of having been in real estate for 30 years, and I've bought a lot of property. And so I use that as an example. There isn't a property I've ever bought, looking back, that if I would have paid 5 or 10% or even more for that property at the time, I still would have fared very well moving forward by keeping that property. So it all has to do with their objective. Is it short-term? Is it long-term? Are they going to live in this property for a little while? And it's all relative to the debt service that they're going to inherit on this property. And if the payment is right for them and their budget and their situation, and they're going to stay there a long time, the purchase price isn't as relevant for what you're showing moving forward, but also showing them looking back, hey, would you in 2011 like to have paid 20% more for a property? Probably would have still done pretty good, right?
Yeah, in fact, there's a slide, Mike, you might have it handy, that we use with clients that shows appreciation in the nation, and then breaks it down by state, going back over 30 years. And that, I think, the cumulative appreciation over 30 years in Utah is over 326%. But that's something that can really give buyers perspective as well.
And Josh, you've got some good material on the fundamentals of the market right now too, because sometimes I have people ask, you know, are we going to see another crash like 2008? But as we hopefully all know, there's just too many economic fundamentals that are underpinning this equity that people have in their homes, that, you know, there's just really not any reason to believe that the house values would decrease at all. So even if you have to overbid to get in, you're not facing that fear that it's going to suddenly, you know, drop off the table like it did back then, because that was all clearly built on a whole house of cards kind of financial game that was going on. And especially here in the Valley, you know, really anywhere in Utah, this market is as strong as they get. So there's really such a good feeling about the increase of value, not just historically, but right now where we are, you know.
Yeah, exactly.
You know, I think one of the biggest things that buyers are facing, aside from being educated on this fact, is having the liquidity to actually do it. If that appraisal doesn't come in, because now they're, in the past, maybe have been used to asking the seller to contribute some closing costs back to help them with the purchase. They maybe only have their down payment saved, but now they have to have an amount over appraisal, down payment, and closing costs. It's just the reality of the market that we're in right now. So it's unfortunate for some that even educating them on this still don't have the capabilities of doing it.
And that's, I mean, that's going to go into some of these other slides as well when we start talking about their affordability. You know, what some of these people can afford to get into, or what they're going to be able to afford to get into versus what they were going to be able to get into before interest rates went up a little bit, before values went up a little bit. You know, you look at this one right here, you know, buyer's purchasing power, $400,000 house, when we were talking 2.75, you know, so borrower A, they were maxed out at 400,000. That was just like the extent of their comfortability. You know, that as we tick up in rates a little bit, you know, they're going to drop down to 370. You know, so we've got to, you guys as agents have to be really mindful, and us as lenders, is as we're taking them looking and as we're progressing and interest rates are kind of creeping in the background, are they getting priced out now to where are you showing them the right houses? You know, are they looking at the right houses? Are they adjusting to some of these interest rates so that, you know, like you were saying, that they're not going to have the cash to pay above? Are they going to have the income, you know, to buy some of these houses as rates increase and their buying power goes down? So, you know, one thing I was thinking about as you guys were talking about that, kind of funny and kind of sucky for me, but in 2008, I built the house that I am living in right now. I built this house. We started in March of 2008. What a perfect time to build a house, as it was being built through the summer. And I just watched the value go down, down, down the whole time it was being built, to where when I finally closed on it, we were 75 grand underwater at the closing table. And, you know, I was contractually bound. It was with Ivory Homes. It was just, you know, they weren't going to let me out of the contract. And, you know, people were around me were kind of freaking out. Neighbors that had closed, you know, freaking out. And I told my wife, I'm like, look, we're not buying this to flip it, you know, next year. We agreed in March to pay this amount. We were comfortable paying this amount. You know, this is a long-term investment. I'm not worried about what it's worth right now. I'm not worried about what it's worth next year. And I mean, clearly, I am way beyond that loss. And I've been in the home and been able to enjoy it, put down our roots, and all of that by overpaying at the time. It wasn't the thing back then, but you know, I overpaid, clearly made up for it. But in that time, because I took advantage and just stuck with it, overpaid, got into the house, you know, was able to be in the house and start doing the things, enjoy it, the benefits of home ownership. And clearly, you know, I bought at the worst time you could buy, and I've made up for it easily in spades. You know, so little testimonials like that, like Jeff was talking about, you know, he's bought and sold a lot of properties. And you know, every one of them he's better off for, even, you know, even if had he overpaid at the time he did. So I think the more testimonials you guys can share, along those lines are going to be huge. And I appreciate you stopping me, Josh, to give everyone a chance to talk.
Yeah, no worries. Let me also just, if I could, I'll set the stage a little bit for what we think is going to happen with interest rates this year while you have this slide up, Mike. All of the bond gods, as I call them, all of the forecasters that are forecasting mortgage-backed securities and the way they think that inflation is going to affect the market. Most of those forecasters are saying that they feel that all of the stimulus, the vaccine, the economy opening back up, all of those things are going to put significant demand on the economy for different resources where the supply chains might not be opened back up fast enough to handle it. And we're going to see near-term inflation. That's pretty much unanimous with all of the experts that I'm reading and studying. And so if we think that we see inflation come around in April, May, and June, it's not unlikely that we may see interest rates between 3.5% and 4%. Now, interestingly enough, most of those economists that I'm listening to and bond gods, as I call them, are saying that they think that the market will correct and normalize, and we won't see super hot inflation into the fourth quarter of next year. So we may see interest rates come back down, but this is something to keep an eye on. If we've maxed out pre-approvals for buyers that aren't able to find houses until rates go up, we're going to have to move down their pre-approval amounts, and that may slow a little bit of demand and maybe help us get a little bit more inventory. Sorry for all the background noise there. Jeff, thoughts on that? Where do you want to take it from here, my friend? What questions do you have, or how else can we help add value?
Hey, Josh, what are the experts saying as far as timeline? I mean, you mentioned, as high as 3.5, maybe 4. What do you think the best projection is of how long that's going to take for them to creep up slowly?
Well, we've already come off all-time lows, which is 30-year fixed rates between 2.5% and 2.75%, depending what kind of product you're on. And we've already seen rates pop just a little bit over and right around 3%. Again, depending on your product. Your FHA and VA loans are a little lower than your conventional loans. So we're up somewhere between 0.25 and 0.375 already. The forecast that I'm getting from multiple sources that we watch says that we're going to start to see hotter inflation numbers come out when the April and May inflation numbers come out, and that's usually a trailing 12-month look back at inflation. And inflation is the arch enemy of bonds, because if you're a bond investor and you're willing to take a 2.5% return for a 30-year investment, and inflation all of a sudden is running 2%. Now you're only making 0.5% return for 30 years. And so that's going to necessitate bond investors wanting a higher yield, which means higher interest rates for mortgages. So I would say between now and the end of the second quarter, start of the third quarter, maybe even into the fourth quarter, we're going to be on a trajectory of likely higher rates for a little while.
And that's going to present, a whole mental issue for all of us, in and of itself. Is everyone and we were talking about this on a Zoom call earlier today, everyone just kind of mentally got that 2 number. They want to see a 2 in front of their interest rate. How are we going to get them comfortable with the 3? And we've got articles we can send you guys that February was on record the worst month for interest rates since 2018, bar none. We lost 1/4 to 3/8% in interest rates in February. Those that didn't lock just kind of missed it. Ship sailed, and we're just kind of facing this right now. But yeah, I think we lost 1/4 to 3/8 just in a couple weeks span. It's since subsided a little bit, and we've seen a little bit of reprieve there. But yeah, like Josh said, it's going to be a fairly slow, steady, I think, incremental through the summer. Okay, so if nobody else has anything to add there, I would love and welcome comments from any of you other guys, especially you other Joneses. Nathan, I know you've got some stuff you're holding on to. So this one was the buyer's purchasing power. I think this one was we had looked at this one too. It's kind of the same thing, just I mean, they've only got a fourth quarter of 2021 at 3%. That would be nice. That would be amazing. I think we're definitely looking at more than that. And this just shows you, that difference in the monthly payments that they're going to have. And I'm going to get into that a little bit more as we talk about a total cost analysis. Josh, have we done a presentation on a TCA with these guys before?
I think one of the trainings we did a couple weeks back, I quickly showed what a TCA looked like. But
Okay.
if you want to show them what that cost of waiting looks like, that might be a valuable tool for them to know, to have for clients that might be thinking they want to, pause and wait and see what the market does.
For sure. So Alex, I'm going to give you a second to pick, to perk up and have your ears on. So I sent a TCA out today. Alex, did you have a chance to look at that one? Uh-oh, no microphone for Alex.
Sorry, I'm here. I just have screaming kids in the background. But yes, I did have a chance to look at it.
So and I'm kind of picking on you, putting you on the spot here a little bit. What were your
Okay.
thoughts when opening that presentation and just kind of looking at it? Had you seen a total cost analysis before?
Yes, briefly, but not like I have with you.
Where it was personal to you?
No, not personal to me, but like a friend or like my parents and stuff like that. But no, I thought it was really great. I thought it was really personable when I opened it. I felt a really good connection, as far as like your video was really great. I liked how it was lined out so you could really see the difference in each one. It makes it easy for like my parents. They're not very techie at all. So it probably helped them a lot. I haven't touched base with her. I called her to go look at it, but I haven't heard back yet.
Okay, good. Well, I talked to your dad earlier and sent it, so we'll follow up on that tomorrow. But it just happened that I was working on something today with Alex, a refinance, for parents. But the total cost analysis is a tool that is just amazing. It's pictorial for those that are visual. It's got all the numbers for those that are analytical. So what I did is I went in and created this total cost analysis. It's the software that we use through Mortgage Coach to show the cost of waiting. And so this is something that we can create for you guys. We can share with you guys. It can be, very personal to what you want to see. If you've got someone specifically that we need to get this in front of. But the way it works is we load in different options. So this first column is option number 1, second column, option number 2, third is option number 3. And then what happens is over here on the side in these different windows, it analyzes those options and compares them with the criteria that we put in there. So for this particular scenario, we took a $400,000 purchase price. They put 5% down at 3 1/8. This is basically saying, look, if you were to buy the house today, this is what it would look like. You're 3 1/8, your payment's gonna be $2,019. And you're going to be bringing 25 grand to close. And so that is today. Now, if you're thinking, I don't want to do it right now. I feel like things are going to cool off. I want to wait. Well, okay, let's look and see what that realistically is going to look like by putting this off and waiting for the bubble to burst, or, what people think is going to happen by waiting. You lose 0.5% in interest rate. So your interest rate is going to go from 3 1/8 to 3.625. You just the exact same house, exact same down payment. Your payment is now going to be $21.24. You lost $105 a month that you're going to be paying on this house. If we go over here to this part of the presentation on the right hand side, got to move some windows around here so I can see that $105 a month is going to result in $7,000 over the next 15 years. And just under $40,000 over the life of the loan, in 0.5% in interest rate. that's what you want to risk it. You want to sit it out and not keep going and keep looking at house and keep making offers. We lose 0.5%. This is what you're facing. Let's say you want to put off till next year. You know what? I'm burned out. I want to wait until next year. We'll tackle this again next spring. I'm like, hey, that's fine. Get it. Let's just have all the information out there, what that looks like. So we're going to go back over here and say, same house, $400,000 house is now going to run very conservatively $420,000. It's increased $20,000 in cost. Interest rates, we're going to say they've even stayed the same at 3.65. We're not going to add another quarter, which most likely is going to happen. We're going to, add a little bit more to that interest rate. But even leaving the interest rate the same and now adding on 20,000 appreciation, which could even, that maybe even not next year, maybe next, the end of this summer or fall. This is what we're looking at. Is we go from 400 to 420, where instead of 3 1/8, we're at 3.625. Now you're looking at a $2,200 payment, which results on the right-hand side to $211 more per month by sitting out and waiting and not just getting after it right now, which is going to be 27 grand over the next 15 years. And then over the life of the loan down here, on the bottom, it's going to be just over $50,000 in, opportunity costs, in interest you're going to pay over what you would pay if you just buckle down and we get serious about this and get after a house right now. So thoughts that come to mind, any of you guys looking at this?
Mike, I'll jump in and just, it's kind of interesting in this market right now. We have such low inventory that prices are increasing dramatically. We're in a really steep appreciation just because of the lack of inventory that's out there. I think you could make the argument if we were in a flat real estate market where most of the homes were going at appraisal or asking price, and you start to see interest rates creep up a little bit, then you're kind of weighing, hey, interest rates are going up, home prices are staying the same. So you're trying to balance that out. But you have two negative things working against you if you're waiting, because you have the houses going up in price and possibly interest rates going up. This should be even more urgent for a buyer to get going now than even 6 months or a year ago. That's what I see. I see two things working against waiting, not just one. I like your example too of buying in 2008, how you're great now. And it was probably, what's Josh's word? I got to say it. It is uncomfortability, right?
Uncomfortability.
That's where Mike was in 2008. So, and a lot of us, but when you think about, that rebound in appreciation later, it worked out long term. And that's what I really see from this is you've got two reasons to jump on and get going. So, and I love what Jeff said earlier too about, if you were overpaying 10, 15% for a house 10 years ago, you're in a great position now. And when you're looking at the market, you say, well, what if it declines a little bit or it slows down? Real estate never goes down long term. Like we'll have some dips, some slower periods, but it continues to appreciate over the long term, meaning anywhere in a 5-7 year, term, you're going to have that appreciation uptick. So you're kind of playing the game by trying to figure out when should I pull the trigger? How long do I wait? And I think, having this information is highly valuable because all of our buyers that are out there know what's going on with the market and the crazy appreciation and offering over asking and appraisal. But this kind of adds on to it and creates even more urgency. And it shows it's really the best thing for our clients to really seriously think about making a move sooner than later and not waiting.
Yeah, I think, what a lot of us hear all the time is, prices will come down. Like, why? Why would they come down? There is zero inventory. What makes a home price go down? Supply and demand. There's a surplus of homes that are going to drive prices down. I've got people all the time, I'm just gonna wait, till foreclosures, because they've got this 2007, 2008 mindset that, they don't realize that our standard of lending has been raised so high that the people we put into homes have to qualify and be able to actually afford those homes so much more prior, to 2007, that we're not going to see that influx of foreclosures. There are so many people that have so much equity in their home. If things get tight, they know they can sell it at the drop of a hat. They're going to take their equity and run. They're not going to sit on it and go behind, get delinquent, and get foreclosed on, and we're going to have all these bargains on the market again. I think that's where a lot of people, I've talked to a lot of people that are getting that mindset, like, oh, I'm just going to wait for this to burst. I'm going to wait for, this a foreclosure sale and pick something up. Kind of circles back to what I started with. Everyone wants a deal. Everyone wants to feel like they won. And it's our job to educate them, like, look, there is no glut of foreclosures coming on the market. Everyone has equity in their home. They're going to cash out and take those chips and run with them if push comes to shove.
Hey, Mike, and the other thing that comes up is the COVID deferment. And, oh, well, how many people that have, are not making a payment because they've got the COVID deferment or whatever, and that's going to result in these foreclosures. But to your point, with the equity position that most people are sitting on right now, why, even if somebody is struggling when they get back into the payment portion, when the deferment's over, even if they are struggling a bit, these lenders are going to work with them and try and get some kind of workout in place. Because why do they want to foreclose? That's way more expensive than just figuring out a way to make it work and keep those people in there. And when they're not upside down, they don't want to leave either, to your point, exactly. So I don't think that COVID thing really it carries much water either.
Hey, Ben or Mike, have you heard any stats on the percentage of mortgage owners that have deferred? Have you ever heard that stat? I've heard a little buzz about that too, and just kind of that same thought you were saying, Ben, is what happens when the deferred goes away. Have you guys heard anything like that?
Well, I have read some about it, which is kind of, what prompted that thought. I can't remember the numbers. It's on paper, it seems like a pretty decent sized number, I guess, is the concern. But I also think that there's a lot of people that are just taking advantage of that scenario for other reasons. Oh, well, if I'm not making my $2,500 mortgage payment every month, and they're not going to penalize me for it, why don't I do something else with that money for a while? And so really the number that are potentially, out of work or in a situation that's more dire, I think that number is actually pretty reasonable. And again, with lenders being in a position where they can work with some of these people, I just don't, I don't feel like that's a huge risk of some glut of foreclosures coming up in 6 months or whatever. Just doesn't make sense to me, and some of the things I've read, sort of agree with that as well.
Yeah, Ben, I just read a stat actually the other day. It was one of Barry Habib's write-up that the serious delinquency rate in the country hit an all-time low, which would make sense because of the massive amount of appreciation that we've had. But it's 0.2% of mortgages are in serious delinquency, which is anything delinquent greater than 60 days. So that's 1 in every 500 homes. So mortgages are performing at a higher level than they ever have in history before. And when you look back at that screen you had before, Mike, where in the last year Utah's had over 10% appreciation. I mean, anybody who's been in their house a year probably has enough equity where they can at least pay commissions and move on from there.
So what I'd like to hear back is from some of you guys, some of the agents here. I mean, what are you tips or tricks are you guys using to try to help get offers accepted? I mean, we're giving you some information on how to motivate the buyers to get them out there, you know, to kind of get them off the fence. But what are you guys, besides our speed to respond and, you know, a nice touchy-feely cover letter, you know, what are some things that you guys are doing to try to get offers accepted?
I think a huge one that we've run into is just having stellar communication with the other side. Because even in this competitive market, it still surprises me how few realtors really try and connect and put something together for both parties. They're just frustrated, they're complaining, they're on Facebook whining about how, you know, I just put in my 6th offer for my client, but they're not really talking about trying to work on that relationship with the agent on the other side. I know for a fact from feedback we've gotten from agents on our team of going under contracts, we weren't the highest offer. That's what buyers need to realize is there's buyers out there that are willing to just throw an offer out there to try and lock it up, thinking that they're going to renegotiate later. And if you don't communicate with the other agent and you're just submitting an offer like that, you're not going to win for your clients. And so what I think it's all of this stuff together, right? We have buyers that want to buy. We're talking a little bit right now about encouraging those that are on the fence to buy right now. I think we're going to look back on this time in 2021. A lot of people are going to see this as the pivotal year, right? Because we've all been talking for a few years that interest rates might go up, and they never did. They kept coming down. And now we actually have that pivot point. What happened just in February, right? You just said is the highest shift in appreciation, or I mean, interest increase since 2018 or something like that.
Yeah.
And now we've got an actual event that has happened that is going to start that trajectory going up. So the talking points are all there. I think to answer your original question, I think communication is really key, presenting a nice clean package, and having things like this to talk about with your clients are good, but you got to remember that other realtor on the other side has a big challenge to face to go through all those offers as well. And they oftentimes will pick the package deal. I'm always talking about that. It's not just my buyer. It's the lender, the agent, and the buyer. Sometimes maybe title, but they're getting a team that's going to help them get to the closing table on this transaction. And when we all work together, I think that's a winning combo right there.
Yeah, not to toot my own horn, but I'm definitely not afraid of that either. You know, I had an agent putting in an offer yesterday. You know, the offer went out, it was probably 8 or 9 o'clock at night. And Josh was sound asleep at this point. I was just getting my second wind, but I, you know, saw the email come through, responded to the agent like, hey, these guys are really, you know, well qualified. We fully verified all their income, credit, you know, whatever. And he emailed back. While I was typing that email, he emailed the real estate agent, said, hey, I'll call Mike in the morning, you know, whatever. I sent that email, and all of a sudden I got a reply back from the agent that said, are you available now? Like, sure, yeah, I'm working. So it was 10 o'clock at night. I was communicating with the listing agent, you know, stroking their ego, letting them talk, do all those things. And, you know, by the end of my conversation is, yeah, I think we're going to be able to come to agreement with your clients. I'll send them a counter. Please ignore my alien cat my daughter dropped off this week. So he said, we're going to have, yeah, I think we'll be able to come to agreement in the morning. So we didn't have to lose that time of going back and forth, making those calls, other offers coming in. They went under contract this morning. They made a counter, accepted, we're good. So I think, like you were talking about, Jeff, is that communication between both sides and, you know, having that open dialogue. Got a lot of quiet people on here. Some of you other agents, what have you guys been doing?
Yeah, very similar experience. Every client is education process to the point of how quickly do you want to move, and how do you feel about making an offer on a property that you haven't seen yet? And I'll go open up a lockbox, and hopefully we're one of 5 based on our offer. It's crazy out there.
So Troy, what are you doing that you're one of 5? What are you doing that's standing apart in your offers to help get it accepted?
Communication's critical, right? So you definitely have to make connection with the agent. And even if you make a connection with the agent, and you're the first one to call them and say, hey, I realize you're probably taking your first listing for the year, right? And they're like, yeah. I'm like, okay, great. Here's what your experience is going to be. My question for you is, what does your seller really want? Because I know you're going to handle it different than your seller is. So my question is, how are you going to lead through the process? And they will tell me. And then I build rapport. And then even still, I make a great offer up to our available approved amount per the lender, with a letter explaining my client's situation and how desperate they are for a home and how tired they are for a home. And even after being told that we didn't win the house and we weren't close, 2 weeks later, I still communicate by text and I still say, hey, we're still here, just in case something weird happens, let me know. And I literally just got a call 3 weeks ago from an agent that said, hey, Troy, I want you to know that you were not the highest offer. You were $15,000 below the next offer, but we made a bad choice. We went the highest offer. They couldn't perform. And after a tarot card reading, you won the house. The person that passed away in the home wants the school teacher to have the house.
That's awesome.
So because I wrote the silly letter and encouraged my client to make an offer, even knowing that we weren't going to get the house, the first round, we were the third round, and the agent shared something with me that I've never heard before. I just hope there wasn't a Ouija board involved.
Hey, even if there was, it's all good.
The school teacher letter helped. It did. And you've got to have a connection with the agent. You have to have a connection with the agent to be like, hey, listen, don't mess around. We're going to perform for you. We put 30 days. It might take us actually 39 days, but we'll be there. Trust me.
Troy, that's fantastic. I mean, the fact that you kept following up, how many times do agents, lose on an offer situation and they're on to the next house and they never think about that house they missed out on, unless it comes back active on the market again. So, I mean, I think your persistence kind of kept you in that and probably got you, I mean, maybe a little bit of tarot card reading helped, but I mean, I think your persistence really went a long way too.
There really is something about the properties that are under contract. And so you start to look at that inventory for your client, and then you go back and visit it. And you're like, hey, so you've been under contract for 3 weeks. How did things feel? Did they waive their inspection, or did they actually do an inspection? Oh my gosh, you haven't heard from the agent? Oh gosh, that makes me nervous. Well, listen, we're here. We'll offer exactly what you guys have. You're under contract. I get it. Just let me know. We're here. We'll close in 3 weeks. And sure enough, you can win deals that way, deals that are under contract.
Troy, that is such a good point. And it reminds me of another situation that just happened over the last couple of weeks. If you think about it from a buyer's perspective, if they're looking at 5, 6, 7 houses and they know all of them are going to go over asking and over appraisal, and it's going to be a real challenge with multiple offers to get one of those houses, there's a good chance that those buyers are putting in offers on multiple properties at the same time. Because from their perspective, they can't find the perfect house, think about it for a few days, go put an offer in, and then wait 2 or 3 days to see if they can get a counter offer and get it under contract. They know they don't have that much time. So they're putting offers on more than one property at a time. So what happens if they get 2 properties accepted when they're putting in these multiple offers? They might go under contract with both of them for a couple of days, and then obviously they're going to cancel one. So just last week, I was helping one of our agents on a listing, and that happened to him twice over a 6-day period, where both times they got it under contract and then they changed their mind a day or 2 later because one of the other houses they put an offer on decided to accept their offer, so they canceled on the first one. So if you stay in contact with that agent, and when they say, hey, you came in second place, make sure you stay in touch with them and let them know that you are available and you're still the willing buyer and you still want that house if you put an offer in on it. Because that's just a great example, Troy, of, staying in front of that agent. But it does happen, and it's because of what's going on in the market. I think there's a lot more buyers going under contract, and then within a day or two, it's coming back on the market again. So watch out for that as well.
Yeah, I love that, Eric. That is, I mean, it really is. When you look at where we've been and how often we've been here, it's like, okay, what does it look like? You've got to be strategic. And if you don't make that connection with the agent and then follow through, it could mean that you're going to go show homes again. So it really does. It really comes down to, hey, what do you really want? How serious do we want to take this? And let's consider offering on property that, you know what, you better make a decision based on photos. And maybe we went and saw the house, because I'm telling you right now, everything you guys have said tonight, you look at what it'll cost you if you wait 30 days, what it'll cost you if you wait 45 days, what will it cost you if you wait 60 days? You may not get a home in 90 days.
Yeah, so true.
Hey, Troy, I just want to add one thing to your follow-up. I mean, I think that's awesome, calling them and letting them know that you're still there. One thing we've been doing lately is even if it's not in backup status, if it's in under contract status, calling them and asking if they would entertain a backup offer. Because our clients don't have that many choices, right? It's not like they're weeding through 50 homes. It's like, I've already seen the 6 that are in my criteria, right? And so by calling somebody that's under contract and just starting that dialogue, if they would entertain a backup offer, they tend to share probably even a little bit more than they would about the process they went through to pick the one that they did. And now they're hoping that they stick through. And if they don't, oftentimes they're letting you know pretty darn close where you would actually have to be in that backup position, right? Because none of us want to necessarily accept a backup offer that's less than what we're under contract for. So I found that they share a lot of information with you if you call and you pursue a backup. I mean, I'm talking about a written secondary backup offer addendum where you automatically become the primary if the primary falls out. That's a good position to be in.
Really great point.
Yeah, call it backup number 1. Just tell them all the time. Say, hey, listen, we understand that you've got 12 offers. We just want to be backup number 1. We're going to be backup position number 1 in the event that something goes weird with inspections, something happens with appraisal. We're going to be here for you, and you'll know in the next 3 weeks, right? Perfect. I'm going to text you. Trust me. Call me, text me, anything, and then you be the one that just puts it in front of them. And it's there consistently going, hey, where you at? How we doing? What are they doing? Are they dragging their feet? Are they telling these stories yet? So that's it. It's going to get aggressive, very aggressive.
I'm interested too, Ben, Mike, or Josh, have you guys, obviously you see the houses that are under contract because the buyer's agent sends them to you to get the loan done. Is there anything specific or out of the ordinary you've seen that's been clever by certain agents? Say, hey, that was a good idea to get that house under contract, and how they won that offer. Have you seen anything unique or kind of different?
I think that the biggest thing that come up for me is I'm starting to see more and more, hard earnest money upon acceptance. Maybe even a staggered earnest money where, the minutes it's accepted, half as hard, the rest goes hard after inspections. Starting to see more and more no financing and appraisal, which, if you read between the lines, what that means is the lender's prepared and able to move fast enough that they're getting an underwriting approval and an appraisal back by the time you finish the home inspections. But that's the first thing that comes up for me when I think of what I'm seeing new or more creative or more aggressive than I've seen in times in the past. And by the way, we started lending in California 10 years ago. And I remember the first time I saw, hard earnest money, no inspections, just, have to get it done. And I remember having a conversation with a realtor in San Francisco, and she was saying it's the only way to get deals accepted. They're putting $5,000-$10,000 hard from day one. Now, granted, this is a high-end home, and I remember the conversation. She said, "Oh yeah, this will never last." Well, guess what? It's still happening. So it's hard to know, how long and how aggressive this market could get here with the severe supply and demand imbalances. What about you guys? Anything else that you're seeing from buyers agents that's super aggressive or unique?
Same thing, over appraisal and not contingent on appraisal coming in, and of course, some hard earnest money right away, but certainly, eliminating that appraisal and shortening up the hard, when the earnest money does go hard. So yeah, a lot of the same thing.
Well, and I'll just go back to the communication thing one more time, because I really believe that that's huge. When you take the time to find out what the needs of the seller are, and you're off, I mean, how common of short-term leasebacks become these days, right? Sellers are afraid to put their home on the market because they haven't found one, or they're afraid they're not going to be able to find a replacement property. So things like delayed possession, even free leasebacks. I mean, we have the lease addendum that we use. I'm seeing a lot of zeros on those leasebacks to be even more compelling. So I think I've had a lot of good conversations with agents just to explain to me the needs of your client that aren't the obvious. They want the most money, they want a deal that's going to close, but what are those little things that you can maybe craft a better offer that's going to make that seller happy? And they know that you took the extra time to figure that out. You're coming across more professional. The communication's established up front. They're looking forward to doing a transaction with an agent like that versus the one that sent in the offer and never even texted them or called them and told them it was in their inbox, right? Okay, I'm done.
Yeah, the best option for the client isn't always the highest purchase price, right? I like what you say, Jeff, it's the package. And as a seller and a listing agent, you are negotiating and accepting the best terms. Terms is everything together, not just the highest price. And that comes from the lender, the agent, the buyer, when you put it all together. So, really good point. That communication goes a long way to making those terms the best possible. And as a side note, we've got low inventory right now. I'm working with a past client of mine right now who really wants to move up into a different house. And she's terrified of putting her house on the market because none of her friends can get one. So having that conversation, and it's a little bit different topic here, but if for a potential listing, is when you have that conversation of, hey, just because somebody gives you a full price offer doesn't mean you have to accept it. You are accepting terms that work for you as a seller. And then also knowing that you have the option to, part of your terms that you want as a seller is a 60-day rent back. So you have time to go find a house. That gives you an option as a seller to have a little bit more freedom to, go look and find a house after you've sold your home. So just a side thought too, on if you run into that seller that is maybe nervous about putting their house on the market.
Yeah, I got to make one more comment about the team dynamic in the package, right? Because guys, one of your phone calls should be, before you even write that offer, should be to Mike or Ben or Josh and say, this is what I found out from my discovery call with the agent. And if speed is really important to their buyer, maybe they need to be in their new destination yesterday, right? Your lender is going to dictate a lot of your deadlines, right? Or lack of contingencies, like Josh mentioned. He mentioned some things that I don't think he really grabbed onto there, but having a lender that can really close quickly can really mean that you can accomplish multiple conditions in your contract within the same time period of, say, just wrapping it up to your due diligence deadline. So you got to be having a conversation with your guy or gal and say, this is what I know, this is what's important to the seller. Let's work, what can we do together to craft the best offer possible? And that input's invaluable.
And when we get that opportunity, when I have agents say, is it okay if I have the listing agent call you? I'm like, hell yeah. Have them call me now, because we've properly vetted these clients. We know we can do the loan, and we know we can do it within a certain amount of time. So when that listing agent calls, that confidence, it's not even difficult to have that conversation. It's not like you're dancing around. It's just, oh yeah, these people are great. They're all set. They're ready to go. When do you need to close? And that is huge, because the listing agent's going to call 10 people and 7 of those loan officers probably won't even answer the phone or call back. And then out of the 3 that do, who sounds like they're really on top of it, that's often going to be the thing that puts it over the edge, or over the top, I should say.
For sure. I would even say, when you're having that conversation with your loan officer and you're crafting that offer, and I know you guys do this, but give them the name of the agent. When you get verification by text or email that offer has been received, I like it when Mike or Ben or Josh is making that call themselves. Hey, I just want to call about the offer you just received from my client, so-and-so. And they're initiating that conversation. The agent's going, what the hell? Sometimes lenders don't even answer my phone and this one's calling me. I've gotten a lot of good traction out of that. So keep that in your arsenal too.
And I'm going to be honest, I get frustrated when the listing agent calls me because I'm like, damn it, I like to beat them to it. I want to be the one calling for exactly what you talked about. So you guys need to be communicating with your loan officer, whoever it is, and give them that opportunity to beat the listing agent to the punch, because that carries a lot of weight. If we can be the proactive ones, because I mean, you guys know it, trying to get a hold of a lot of loan officers is a real source of frustration. And at the end of the day, everyone wants their commission. They want to make sure it's going to close. If you can't get a hold of a loan officer on day one when there aren't problems going on, or when everything's great and sunshine and rainbows, you're never going to get a hold of them when stuff has hit the fan and they're hiding somewhere and hoping it happens. So definitely give your loan officer the opportunity to be proactive and make that call, and not just reactive answering the call.
Great stuff, guys. We're at the top of the hour. I think we had some great information tonight. Want to be respectful of everybody's time. Everybody, thanks again for jumping on. Mike, Ben, Josh, you guys are rock stars. We really appreciate you. Hey, while you're here, do you mind throwing in your contact information just in the chat? So if anyone here doesn't have your contact info, we can get a hold of you. And really appreciate you jumping on and helping us out tonight.
I got to hurry up and beat Ben. I don't want him trying to take anything.
No, that was a lot of great information, guys. I like the visuals too. Guys, reach out to them. They're leaving their contact information if maybe you want to copy some of that stuff.
Yes, it was very informative. Thank you so much. Just being new, getting back into all of this. This has all been awesome. And I did love the visuals. So if we could have a way to get those in front of a few people that I have that are looking right now, that is a huge tool to be able to put in front of them to make the leap, like what you guys were talking about, and not hold off.
Yeah, I can send those over to Jeff. I can send any of these visuals over to you guys, and then disperse them out however you guys see fit, to Eric or Jeff, either one of you guys.
Okay. Yeah, I haven't seen anything like that yet, so that's awesome.
For sure.
Thanks, everybody. Appreciate you all.
Thank
Mike, I
you.
love the mascot too. You need to bring the mascot every time you show
Dude,
up.
I live in a friggin' farm, man. My daughter came home from college on Sunday to go down to see some friends in St. George. She dropped off this thing, which is just an alien. I don't even know what it is. We won't even get into what it feels like. And then we just rescued another dog on Saturday. And so like it's in intensive training right now on how to get on my longboard and longboard with me. And yeah, it's a mess around here, but it's fun. Keeps it interesting.
I love it.
Awesome. Appreciate you guys. Everybody have a good night.
We'll see y'all soon.
Thanks,
Yeah.
guys.
Thank you. Bye.